All right, looks like we're talking about this one for the first time, HIMS and HERS. So this stock today hit 64.84 and closed the day 64.50. So it has been rallying pretty crazy. Year to date, this stock probably up more than 100+%. And here's what I'm watching. So actually, I traded this name. I think I was a little bit cocky in the morning and I didn't take because the goal was to watch the pre-market high. So every time any stock runs away, keeps pushing higher, and especially if it's a squeeze stock, what I have seen many times, especially large caps, anything like any stock actually, it can be any capitalization, takes out that high, and especially if it's Friday, a lot of people sell their options, and market makers tend to sell those shares that they hedged with when they sell those calls. Stock tends to flush down pretty quickly, like 10-15%. That's what I was looking for, like maybe 57, 56 flush down. And I was a bit confident right here at 300% or so. I didn't take it. And then somewhere right here, I came back and I'm like, my contract is pretty much sitting at the same price. So it took like 40% or so loss on that one and moved on because it decayed 0 day to expire. But this was the thesis. I pretty much laid it out in Discord again, that I was watching 65 as a resistance. And here's what I'm watching now. So is this stock extended? I'm sure everybody's telling that it's extended. It's overvalued. It's expensive. Sure, I have seen it. I mean, it's market, okay? You don't want to compare market to, like, I hear these statements where people, I even tweeted this one, like, stock market is not a grocery shop, okay? It's not a grocery store. Nothing has to be valued at the fair price, and nothing is actually priced at the fair value. Many things trade at an overvaluation, many things trade at undervaluation, and maybe some names trade at the fair valuation. But it doesn't mean that everything has to trade at the fair value, okay? Sometimes some things get squeezed out to insane levels, but sometimes they're just depressed at a very low levels. So for this stock, it looks like they have earnings coming up, which is 24th. So next week is pretty big option expiration. And this stock has come up from last earnings report. If you just measure it from the last time they reported earnings, this stock is up 200+%. So even if they report positive earnings per share, anybody who is long, they will use that liquidity as an exit and they will sell. Again, this is purely my opinion. I'm not telling you to sell your shares or buy this stock. This is just random guy on YouTube. You can end up losing all of your money literally tomorrow if you if you listen to the random guys on YouTube. But I trade stocks mainly. I am not a buy and holder, especially when it comes to small caps. I shared TDOC for YouTube members here earlier, like a couple of weeks ago when it was trading at $12, which is another telehealth stock. TDOC, which is valued at maybe 6 times smaller than this stock capitalization, HIMS and HERS. So I think I was watching that 12 as a resistance. Now I'm watching 15, and I was thinking like if it breaks out, it can squeeze all the way to 22. But it doesn't have much of a short float like HIMS and HERS. Here's the thing with this, and I compare these two. What's going on? So if you take a look at the HIMS, this thing has 210 million outstanding shares. 33% of the float is short, meaning 70 million volume. So how long it's going to take for those shorts to get squeezed? Well, at least 2-3 days, and they have been getting squeezed with a higher volume. Yesterday traded 40 million plus, today traded almost 40 million, 39 million. So this is squeezed, and we all get that, okay? As a trader, yeah, that happens, okay? It happens to any stock out there. And it doesn't mean that shorts are getting out. It just means that some shorts could be just averaging down. It's not everybody gets out. Some people have hedges. They buy calls and they short naked the shares. But the fact is, yeah, when stock is sitting at all-time highs, it's stupid to short it, okay? Unless you saw this move with large volume move up and up very fast. If stock makes in a very short period of time 100%, 150, 200%, sure, then you can trade over exhaustion and you can pretty much short into the profit taking. But you don't want to short a stock just because it's trading at all-time highs if you think it's overvalued. So here's the thing. I was comparing it to TDOC, 6 months performance. Pretty much they were trading in line up until December, till January actually, till February maybe. And then here it just took off. So TDOC is up 100% while HIMS and HERS is up 278% in the last 6 months. And if we take a look at they do pretty much the same thing, but HIMS and HERS, it's just earnings per share. They are reporting positive earnings per share compared to TDOC. And I was comparing the employees as well. So it looks like TDOC has 5 times more employees, 5,600 versus HIMS 1,000. And if you take a look at the financials, yes, in terms of revenue, TDOC has 2.6 billion revenue per year. But at the same time, stock is only $2.5 billion stock. HIMS has 1.2 billion revenue, but it's a freaking $13 billion stock. So gross profit, you can see same thing. TDOC almost twice more, 1.8. But operating income, see, this is the discount. This is where HIMS in favor because they're reporting positive earnings per share while TDOC is freaking burning that cash. So that's why you're seeing the outperformance, which makes sense to me completely. But I thought that's the reason why I shared TDOC, because I thought if small caps catch a bid, this stock would definitely push higher because it's $2.5 billion stock for it to become $5 billion stock if they report slightly narrow loss versus what they have reported. They don't have to report positive earnings per share. That's why I shared it. And I don't have a position in any of them right now. I'm not trading them, but I gave a shot for HIMS and walked away with, it's a small loss. That's fine, 0 day to expire. And that's what's going on with these two names. In terms of the price action, here's what I'm watching. So for the stock, I don't know what you're going to use. You can use Fibonacci extensions, right? If you think that you don't know how far the stock can go, you can say, okay, maybe this was the rally to 35, and then you come to the pullback area, and then you draw this fib retracements, and you can look at it that way, and you would have resistance at 65. And if it pulls back, you would have a support around at 49.67, something like that. Again, you can draw it however you want, but this is how I usually look. Like if I don't know how far it can go, or I just take a look at the standard deviations, which I use 2 standard deviations to look up how far stock can go. If I'm trading it on a daily, on a like 30-minute, hourly, I'll just look at the channel, and as soon as it gets over that channel, I'll consider it as a overextension. But today it chopped, killed premium, but volume was high. But let's take a look at the option activity. It is very options driven stock. So if we take a look at today's put to call ratio on HIMS, you will realize that there were 139,000 puts traded, 129,000 calls traded. So, but by looking at where they executed, I cannot tell what was going on. Probably puts were being sold, but implied volatility is very high. So going into their earnings report, which is going to be February 28th, is going to cover that earnings. Implied volatility, option activity is implying that this stock could move up or down $16. That's a big move, but again, this is a mid-cap stock now. And you should realize that it happens. Those kind of moves happen when this stock, when small caps rally away like this, they can flush down 20, 30, 40% easily too, but you have to stay open-minded, okay? So going into the earnings report, So far I'm not seeing much of a bullish bets because there are some 58 call. I mean, these are expired actually. They're not covering earnings. I'm looking for something that is covering earnings report. Okay, I'm seeing February 28th, $69 call, 2,000 contracts. What else? Next year, $50 calls, but these were sold at the bidder, meaning these could be short. There's one interesting one, February 21st, $85 call for next week, but overall, largest orders were put trades for today that could have been sold to capitalize on. So basically, a lot of people sold $60 puts, $58 puts, and they collected premium. Good job on that one, February 14th. So yeah, a lot of put sellers milked this name today on an expiration date. Well done on that one. But going into earnings, nothing standing out in terms of option activity. It's just purely squeeze. It's not that a lot of option traders driving it up, but yesterday it was very bullish looking. So what I'm watching? Well, anytime you see a stock run up like this, let's say from last earnings, let's now measure from last earnings report, this stock is up around 200%. So if you see the stock come earnings and this stock is still pushing higher, or they report good earnings and stock gaps up, let's say pushes towards like 70, 75, 80, that's a sell the news event for me, which means some people will be taking profit, other people shorting it, and I would be looking into flush down on that. But so far, I'm not fighting it in terms of like buying long dated puts and thinking, oh, it has to crush. No, I don't have such mindset. I follow the price action, and today price action was pretty much telling that this is like struggling to push higher. And anytime you see stocks try to struggle like this, they could reverse very fast. And that's what I thought it could happen, but instead it just turned into choppy mode, while yesterday it had a pretty clean action, which meant that a lot of shorts got caught off guard yesterday when it moved pretty clean actually. Smooth move up, smooth pullback, and then grind its way back up to these levels. So I'm watching this name basically neutral at these levels, but you have to be cautious if you're a long bias trader, not to try to top tick. At least if you are long, the one way of like limiting reducing the risk is not to pay the top price in the market, which means if you were somebody who paid 64.84 today, well, you were the one who top ticked the stock. So you don't want to do that. But again, these videos are not a recommendation for you to buy or sell. I'm not telling you what to do, sharing my thoughts, and if I happen to trade this one, we'll definitely come back and share my basically thoughts if I place any sort of option trade on this one. But so far it is going into the watch list, but I'm interested in TDOC, watching this name to see how it trades on the back of the basically HIMS, because this hasn't gotten much of action compared to HIMS. So, but again, any of these names can flush down at any moment, but that's the update for these two names. That's what I'm watching. Thanks for watching. Take care. Peace.